Welcome back. And what in the Internet Computer is going on here on the Internet Computer dashboard? When I'm recording this video, it is posting 0 transactions per second. We're going to be discussing the Internet Computer among many other topics, including now that Bitcoin has again touched its all-time record high. Are we hitting that $1 million? Are we hitting that $50,000 in Ethereum? Well, that is potential because we are seeing a lot of institutional and Wall Street interest in the Ethereum ecosystem, not just in Ethereum, but Ethereum is definitely the granddaddy of the layer 2s and the DeFi ecosystem. And in today's video, we're going to be discussing Hedera, Near Protocol, USDC, Ripple, Coinbase, Brad Garlinghouse from Ripple, the XRP coin, Bitcoin, and Ethereum, among many other topics. We have a lot to discuss in today's video. We're going to be starting right here. Something that I've been saying for quite a while now as we are in the second half of 2025. When I'm recording this video, one Bitcoin maximalist and also host of the Bitcoin podcast said, "And so it begins," and posted a text message from somebody that says, "Don't you hold Bitcoin? Hey, brother." Now, in follow-up tweets, he said that this was a real, actual text message. And as I've explained to my viewers on this channel, as we are approaching all-time record highs for now the 4th time in this cycle, in specifically Bitcoin, we really have to understand where the market sentiment is. And as I've explained, when you start to get calls, emails, texts, DMs from people that you may not have heard from in a while and never talked to you about crypto or money before, all of a sudden asking you how to get into the Shiba Inu coin or the PP coin, or when should they buy Bitcoin at all-time record highs. This is an indicator of the top of the market, but a lot of people have been saying, Cryptoviser, you were wrong about Solana. You're going to be wrong about this quadruple top that we've seen, right? Double top at the beginning of the year, now double top where we are today in the second half of the year. Can we get to $1 million? Can we get to 50,000 in Ethereum? Let's get into it. Don't forget to give this video a free thumbs up. We upload every single day on this channel to bring you the latest happening in the financial world. Sometimes we talk about the macro and many different cryptos like what we're doing in today's video. And sometimes we do deep dives into the individual assets. And so we have a lot of altcoins and crypto talk to get into. So let's get right into it. Now, again, this to me is an indicator. When people start getting text messages, it may not be the indicator, but it's a part of all of the other indicators that we have been seeing. Peter Brandt, who is a well-known, longtime trader in the market, posted this chart of Bitcoin to US dollars and said, "There is nothing special about this chart. An expanding inverted triangle has a higher rate of morphing or mortality than a pattern such as a horizontal pennant. Nevertheless, I am long Bitcoin. A decline below $107,000 would suggest morphology." Okay, so effectively, the Bitcoin chart, nothing was really going on. I mean, we are sideways trading right now, and what I think is going on and what I see happening in the rest of the market is the narrative is shifting more away from Bitcoin into altcoins, into Ethereum, into stocks, and basically into other, narratives outside of Bitcoin. Because think about it, guys. We've been hearing about MicroStrategy and this company buying Bitcoin, this company buying Bitcoin, this company buying Bitcoin. It's the narrative is so exhausted that even the price is just like staying right there. Like, you guys keep talking about all these Bitcoin treasury companies buying at the top of the market. Meanwhile, nobody seems to be questioning in the market like why the price is barely moving. The price is barely moving because people are cashing out. They see the exit liquidity is Wall Street. It's not you. It's not this guy texting a Bitcoin maximalist saying, should I buy Bitcoin? They are not the exit liquidity. And as I showed you on previous videos, the charts for 2025, the first half of the year at least, show more retail inflows into the stock markets than we saw in 2021. When that was, the markets were going way higher percentage-wise than what we are seeing in the first half of 2025. So we've already seen retail entering the game, and the price barely moves. We've seen Wall Street entering the game. The price barely moves. And we're talking about billions and billions of dollars of inflows from these institutional interest. But now they're starting to shift. And so there's a lot of people who are not shifting with the market. Again, we trade the market in front of us, not the market that we want. And so there's people who are just trading the market that they want. They're like, oh no, Bitcoin's going to hit $1 million. It's like, how? How? You would literally need trillions of dollars of inflow to get to those prices, and we will get there over the course of time. I just don't necessarily see the pathway in this cycle to get to $500,000 or $1 million, but that doesn't mean I'm going to be correct, right? I'm laying it out there. I'm not saying that I'm going to be correct, but when I'm looking at risk reward, I don't know, just kind of where we are in the cycle, 12 to 18 months, people are the most bullish they've ever been at this point, at all-time record highs, quadruple top. I don't know, it's getting a little nerve-wracking, but that kind of brings us into the other conversation about Ethereum. Now, we're going to be getting into Ethereum in just a minute because there is a potential that Ethereum can hit $50,000, $100,000. I saw the other day a $180,000 price target for this cycle by a large financial firm or something like that. I'll probably talk about that on a future video, but I was like, whoa. But some of it is like, we have to pay attention to it because Ethereum has significantly underperformed in this cycle. And if a lot of the money flow moves away from Bitcoin into Ethereum, there is that big potential that we're going to hit it. But again, we're wavering. We haven't even seen a corrective phase pretty much all year. So that doesn't mean that we're not going higher, but it's something to at least put into your research portfolio to understand where we are in the cycle. And by the way, a big part of all of this is the off-chain transactions. Now, Coinbase has unlocked off-exchange settlement for institutions amid high demand. So this is very interesting. Coinbase International has integrated with Copper's Clear Loop network to offer institutional clients access to off-exchange settlement amid high demand for more efficient and secure trading infrastructure. The collaboration allows institutions to manage collateral and settle trades in near real time without moving funds onto the exchange. The move aims to reduce counterparty risk and boost capital efficiency, two major concerns for institutional crypto participants operating at scale. Athena, a stablecoin protocol known for its role in hedging USDE, has been named a day one launch partner for this integration. They said institutions want this functionality and flexibility because Clear Loop enables jump step in the off-exchange settlement times for institutions using Coinbase International. This improves the user experience of managing collateral, reducing counterparty risk, and improving capital efficiency. But something to think about is not just off-exchange transactions, but the ones that are happening on the exchange, right? Coinbase Institutional. When MicroStrategy is buying Bitcoin, they're not putting an order on the order books and buying, right? The way that you would, right? You go put a limit order in or just a market order or just go on Coinbase or whatever exchange you're using and just press buy. They're not doing this with billions of dollars. And I think this should be very clear right now because if they were doing it, you would see it on the order books. If you go to the order books of these exchanges, they're very, very thinly traded. Binance is the most, the least thinly traded, but it's still fairly thinly traded when we're talking about all of this Bitcoin that they're buying. And this makes me believe these are off-chain transactions. And off-chain and then off-exchange, it's like you wouldn't even be able to identify the purchases are even occurring. And it would make it very hard for the metrics and data websites to be able to track all of that, right? On Coinbase, you can see the flows in and flows out. And I think that they're able to track some of the Coinbase, hot wallets to kind of identify, okay, there's inflows coming in, there's outflows. But if they're doing all of these transactions off-chain and MicroStrategy, let's say, is going to the Bitcoin mining companies and saying, we're going to buy it directly from you, you don't even really see those flows on the network. And so I think this potentially is part of the reason that the price has barely moved because these are not on on-chain settlements. It's like private transactions between a seller and a buyer. This is very different than what we've seen historically. And I think this is part of the reason we're not seeing the prices move. And so now you're not even going to be able to see the flows for Coinbase because these are going to be done off-exchange settlement, basically meaning on your own wallet. And we know Coinbase Wallet continues to kind of grow and expand their use cases, and maybe they're going to be involved there. But another indicator of where we are in the cycle is this. Now, this we've been prepared for a few months, but remember, where there's one, there's probably many in terms of bankruptcies and companies that are not able to uphold what they have sold effectively. And so Link 2 bankruptcy is no threat to pre-IPO markets, according to Equity Zen. Now, here's the deal, right? The bankruptcy is linked to a private investment marketplace holding 4.7 million secondary shares of Ripple. They basically went bankrupt, and effectively they were selling private shares, very similar to what we're seeing now with what Robinhood is doing with tokenizing shares of OpenAI, and OpenAI is not even a public company, so it's private people who have shares in the company are selling them on the secondary market. The fact that that launched as Link2 is going bankrupt, and the fact that it took 6 months for Link2 to actually claim bankruptcy, it tells me that this was a managed, they were not going to let all these people, right, just go to zero and lose all their money, right? It's basically they're bailing these customers out and probably working with the companies to make sure that the customers are going to get what they need. But this is just one example of promises that weren't able to be kept for whatever reason. And this is why I say, guys, whenever there's like a new product out there or something that everybody's talking about, and these are not regulated, these are not like passing the vibe check, you have to be very careful with your money. Because yeah, they're bailing it out right now, but think about FTX. A lot of people lost a lot of money in that. And they believed that it was the completely safe thing to do. We see the same thing happening with other type of investments. It's like, oh, look at this shiny object over here. Instead of even the Bitcoin maximalists saying that Bitcoin is the best thing on the planet. And meanwhile, all they have been doing this cycle is shilling companies that are buying the Bitcoin with debt and dilution of the underlying shares instead of just telling people to buy the Bitcoin. Now, I guess Michael Saylor does tell people buy Bitcoin, don't buy MicroStrategy stock, but people just don't listen to what he's saying. But at the end of the day, this is the new shiny object. And we know, like a lot of these companies that I think this is why they're letting Robinhood tokenize these shares, because they want the big companies that they know are legit to do this. They don't want newer companies doing this, like testing it out. It's the same thing that I talk about with these crypto IRA companies. I wouldn't use any of them. The only real company that has crypto IRAs right now is Fidelity. They're regulated. They're a bank. This is what they do. All these other companies that people are chasing, they're saying, but Cryptoviser, my coins are safe. It's like, are you sure about that? Yeah, they're safe. They're definitely safe. It's like, well, that's what everybody said about FTX as well. That's what everybody said about Celsius, Voyager, 3 Hours Capital, etc. And so personally, I'm not willing to take that risk with any of these new products. And there's a lot of people who will, and that's totally fine. But don't invest more than you can afford to lose, because these kind of things can happen. And if the regulators didn't get involved, maybe these people would not be getting whatever their ownership was. Something to just think about of where we are in the cycle. There's probably going to be more bankruptcies. We haven't really seen any crypto bankruptcies yet, but we will. We will. And people who are telling you we're not going to, they don't know what they're talking about. This is how market cycles work. The companies overextend themselves, spend too much money, and then they go bankrupt. That's how things happen. Anyway, moving right along and staying on the Ripple conversation, Ripple's CEO Brad Garlinghouse addressed the Senate Banking Committee on Digital Asset Market Structure. And by the way, I watched the hearing. It was a big nothing burger. I even wrote notes. I said, it sounds like they're either the Congress people, it sounded like they either knew a lot about crypto, or they knew a lot about crypto and were just trying to block anything crypto related. There was really nothing negative that came out of this meeting about crypto. And so we're at the point where Congress knows they need to do something. They need to either give market clarity. A lot of the conversation was about whether Congress needs to, pass a law that's very specific, or just pass a law to say like cryptos are securities if this, or cryptos are commodities with this. But with the crypto industry, there was a few people with crypto industry, and one that was like anti-crypto because of Trump's family involvement in crypto. It's like, wait, but don't Congress people own real estate and they're making decisions on real estate in the country? Like, just because you're making a decision on it doesn't mean that you shouldn't invest in it. That's completely absurd and ridiculous. That's my view on it. Plus, if you know that the president is pro crypto and wants all these crypto things to occur and you want to not be poor, why don't you just get involved in it as well? It's, you know what I mean? It's like, it's crazy. But anyway, so it didn't seem like they wanted to, that Congress is going to do anything, to be honest. Because it was kind of like, well, you want us to regulate it, but you don't want us to overregulate it. So what do you actually want us to do, right? And so it sounds more like they're just going to kind of let things go, at least Congress, right? The Congress wants the regulators to deal with it. The regulators want Congress to clarify. The crypto industry wants Congress to clarify. But Congress is saying if we clarify, then you're saying that if they said cryptos are not securities, the SEC could say, okay, but staking is a security, or a native token is a security, or a bridge token is a security, right? So then they're just going to keep getting layers built around that get around what the actual regulation was. That's a lot of what the conversation was about. But to me, it sounded like they're not going to be passing anything market specific, at least this year. And so things are just going to kind of go as they go. This could be a good thing in the short term because we have, a very pro-crypto treasury, pro-crypto SEC. But again, if the administration changes in the next election, that could change as well. And so they want to substantiate and solidify clarity so that doesn't happen. It's not based on, just 4-year whim of the SEC chairman, but that this is integrated in the ecosystem. I just don't know that it's going to happen anytime very soon. And so Brad Garlinghouse spoke there. But again, it was a real big nothing burger, to be honest. But meanwhile, Brad Garlinghouse confirms that Ripple is actively seeking a U.S. banking charter. Let's listen to what he says on CNBC just this past week. And don't forget to give this video a free thumbs up. We upload every single day to bring you the latest happening in the financial world. All you got to do is give the video an absolutely free thumbs up. You can also become a channel member by clicking the join button or subscribe plus button down below. Let's listen in.
You still want a banking license, right? Even though you have this deal with BNY.
Well, yes is the short answer. We have pursued and requested application to apply for an OCC license as well as a Fed master account. We think that the key here for crypto and the kind of decentralized finance, as many people call it, Ripple has been building bridges between traditional finance and decentralized finance. The world isn't going to be taken over by crypto. Instead, we think about how do we take the best of what crypto brings in facilitating faster, cheaper transactions and bring it to traditional finance. That's been at the heart of what Ripple has been focused on from the beginning. This is a step towards that, and certainly getting an OCC license, for those that have said that the crypto world wants to be unregulated, whatever, the opposite is true. I'm here in Washington in part, as you referenced, there's a Senate Banking Committee hearing today. We are advocating as an industry to be regulated. And those that, like Ripple, who have stepped forward and said we want to get an OCC license, in addition to the licenses we have with the New York Department of Financial Services, it only continues to augment that very robust, very compliance-first, trusted partner so that we can continue to use these technologies to benefit consumers and businesses.
And that's completely correct. What he's saying is that the more licenses they have, it's going to become impossible for people to say that this industry doesn't want to be regulated and they're not regulated. I mean, crypto is highly regulated already. It's probably more regulated than banks. But I want you guys to focus of where we are in this cycle. Brad and Ripple over the last 6 months to a year have not provided any guidance onto how this all benefits XRP. In fact, Brad has made it very clear that XRP and Ripple are two different things, and investment in Ripple is different than XRP. This doesn't mean that the price is not going to move based on what Ripple is doing. For instance, if Ripple IPOs, which I don't think they're going to do anytime soon, but if they were to IPO, the XRP price would probably go higher. But why? Ripple is selling XRP. They have said they're going to continue to sell XRP. They're not doing anything really on the XRP front. And this this is kind of like, I don't know, it feels like a bait and switch, right? And it seems like the XRP army doesn't see any of this. I don't know why. And listen, I've always said this about XRP army is never underestimate what Ripple will do in terms of taking over finance, right? Because everything they said that they're going to do, they've accomplished so far, right? They said that they were going to prove that XRP is not a security. They did that. They were going to be part of the regulatory fight. They did that, right? Now, again, but they're also saying they're going to sell their coins. So it doesn't add up. It doesn't make sense. What Ripple is doing as a company is very different than XRP, and they don't need to use XRP for their company. Now, I don't think that they're going to abandon XRP, right? But I still just haven't seen what the plan is for XRP and the future of XRP, because the future of Ripple is not the future of XRP. They're two separate things. And yeah, that is kind of why I don't know where we are in the cycle, where we are in the XRP cycle, because I do think that XRP has room to go higher, because I think that the pump that we've seen in the XRP price was specifically because it didn't perform in the 2020 cycle. So it's kind of repricing where it should be in the cycle. A lot of that because of the whole SEC overhang about Ripple and XRP. But now that that's all over, we did see the repricing of XRP. But what is the next catalyst? An XRP ETF is not bullish for the coin. It's actually bearish because they're just going to be buying the coins directly from Ripple. And so that can't be a bullish sentiment. Them becoming a bank doesn't necessarily mean it's a bullish sentiment. Because yes, the bank can start custodying XRP at that point, most likely, right? We've even heard the Federal Reserve say this. But banks are already doing this, not with XRP necessarily, but with other different cryptos. And so just bringing XRP into the banking ecosystem doesn't necessarily do anything, because I think that most of the interoperability with TradFi and Ripple or RippleNet is going to be done with their stablecoin, RLUSD, which I also have not seen any direct connection or integration from XRP. So maybe I'm missing something, but because I want to understand why the XRP army is so excited. And maybe the XRP army also owns shares of Ripple, and so that's kind of why they're bullish on both, and that would make a lot more sense. But if they're just holding XRP, I don't get it, and I really want to, because I feel like I'm missing something in the investment thesis about XRP. Maybe I'm not. You guys let me know, because I'm always willing to change my investment thesis and portfolio. Moving on to Ethereum, and this is one that we have changed and we become very bullish on this channel, because as the Bitcoin narrative is becoming exhausted, like quite literally, I'm pretty sure all of you are sick of waking up and saying, wow, this company bought one more Bitcoin. Congratulations. Who cares? Like people are not going on, Fox Business every day and saying, well, we just bought 15 more shares of Tesla stock. Like nobody would care, right? But they're doing that with Bitcoin every single day. But anyway, a new bullish report on Ethereum saying Ethereum is becoming the reserve asset of the on-chain dollar economy. Now, this is, I believe, from the Electric Capital Beyond Stablecoins, the Use for Ethereum report, where they do show, stablecoin usage has increased substantially since the previous cycle. As I've explained in the bear market, USDC is the key. We specifically talked about this with Cardano extensively and endlessly, and it seems at this point that at least anybody with below average IQ can understand Cardano is not getting stable coins. It's not happening. It can happen for whatever reason. It's not happening. And that is really, really not good. It's really, really not good. Because what I said in the bear market was, if Cardano cannot get USDC or even Tether, but USDC was the key because this was the US-based stablecoin, Cardano's interoperability would stay low, smart contract usage would stay low, developer activity and new interest in the coin would stay and become very, very low. Because what we're seeing is all of these reports are about stable coins. We saw Circle IPO'd, and they went from an IPO price of $30 all the way up to $300, because institutions want the dollar involved in crypto, and billionaires want the dollar involved in crypto. They're not going all in crypto. They have crypto and they have cash. But to interact, they need it to interoperate with traditional finance. Traditional finance uses the dollar. And so when I was talking about this a few years ago, we didn't know that Circle was going to go public. We didn't know that the Stablecoin Act was going to pass. We didn't know that DeFi was going to become as big as it is. I mean, you can kind of guesstimate, but nobody knows what the future is going to hold. We can predict things and look at things, but we don't know. We were right, 100% right about stablecoins. That stablecoin integration is 100% key. And what we have seen with most of these chains over the course of time, and by the way, we're going to be showing you, Hedera actually confirms this a little bit later in the video. Hedera Hashgraph, they have proved what I'm talking about and what all of these research papers have shown. And the peer-reviewed crypto, unable to see it and unable to, like at this point, I don't know why they're not integrating it. It sounds like previously it was a money situation just to get the conversation going. And honestly, they should have fucking paid the money. Instead, they paid for all this other development and no actual products built, right? If you're paying for something, like you have to look as an investor, right? If I'm going to pay Bitcoin, is this the price that I want to buy it at? And is it going to go higher than this, right? And so if the cost benefit analysis is like, wait, where we are in the cycle, it doesn't make sense to buy Bitcoin. It probably makes more sense to buy Ethereum, even though I want to hold Bitcoin, because this is going to perform better. Why would you not do that? Why would you say, nope, I'm going to go for the lower performing one because, you know, that's the better investment? It's clearly not. And the same thing goes for development. If you can take a very highly skilled team that has done all the back-end work of interoperating multiple different blockchains, which USDC Circle has done a very good job at, right? They even have a new feature where it blends all the different chains USDC ownership into one wallet balance so that you can see without going on each individual network. Circle did all of that. And so if you could put money, just a little bit of money, they said it was like $20 million to just get the conversation going. But instead, they wanted to spend $200 million on creating their own stable coin, which nobody uses and nobody's going to use and was complete failure. And so that's where we are. And the rest of crypto understands stablecoin, stablecoins. And so the coins that have stablecoins, these cryptos are getting integrated in traditional finance. These stablecoins and networks and cryptos outside that are connected to USDC and even Tether are going to be used by the banks. Their technology is going to be used back end by the banks, period. We know this. Ripple, what happened? Circle went public the next day, the day after they went public, they added XRP ledger to USDC. So number one, they showed we are now on Wall Street. We're now a publicly traded company and we approve XRP. That was for me, the final thing that was like, yep, no way that other chain is going to be able to get USDC at this point. There's no way. And that's very sad. It's very sad. I mean, there's other ecosystems as well. You know, we talk about internet computer a lot on this channel. We're going to be talking about internet computer in a few minutes because we're showing 0 transactions per second, which is like, what in the internet computer is going on here? But before we go there, we got a lot of other things to talk about. So I didn't really even want to bring up Cardano in this, but we were talking about, you know, Circle and USDC and stable coins. They are the key. They are the key. If you think that your crypto is going to bring in billions and billions or trillions of dollars of money movement from traditional finance and it has no stable coins, you're missing the point of where this ecosystem of crypto is going. And by the way, it's all right now focused on Ethereum. And so people are transitioning out of Bitcoin and moving to Ethereum. GameSquare surges 60% after the board approved $100 million Ethereum Treasury initiative. And we talked about this company, and I've told my viewers on this channel, this is the alt season. This is what you're going to make 10, 20, 30x. But you don't have that much time, right? I'm not saying like if you're watching this video in September or October or November of 2025, this part of the video, pretend you're not going to hear it. There's other important stuff that we're going to be talking about, but I'm talking about immediately, as soon as a company announces we're going to be buying Ethereum for an Ethereum strategy of raising 350 million or whatever the money is, personally, I'm buying within a minute, within 5 minutes, I will be buying as soon as I hear the announcement. Because what we are seeing, Circle 10x, GameSquare 10x, Sharplink 10x, Bitmine 10x. This, we haven't even seen this in Bitcoin. People who are like, oh, but Bitcoin is the best. No, guys. Bitcoin has went from $15,500 to $110,000, $112,000, right? Basically an 8x. 8x. Okay. Bitmine, I want you to see this. It went from $4 to $135 in a week. Now, it did come right back down, right? That's something to keep in mind as well. But this is where the volatility is, right? If this is where the volatility is. And this is what I think is what is kind of starting off this kind of final phase of the bull market, this final rush. There's a lot of people who are down in their portfolios, and they're going to be down even more if they're not changing their investment thesis. Because there's a lot of people who are up in Bitcoin and they're down in all the altcoins, and they're not securing profits. And so then what will happen is Bitcoin could potentially drop to my target, which is about $50,000, while altcoins go up. They didn't secure profits here. Altcoins are going to go up. They're going to say, I'm just going to make my money on altcoins. We're going to go up 10x, 20x, 30x, 100x. We may only go up 4x or 5x in these alts. And so they're not going to secure profits here either. And then Bitcoin will go back up. And then they'll say, oh, this is the pump. This is the pump. I was right. The pump, we're going to go to $1 million this cycle. And then we're not. And then they're not going to secure profits. And so they're going to go through the whole cycle and not secure profits at all. That is a risk. And so this is how a lot of people, they're going to see these companies going higher. These companies, they just started buying Ethereum, right? I'm sure there's going to be announcements in the near term, right? In the second half of 2025 and potentially even early 2026. And these announcements could push the price up again like this, right? Obviously, there's a lot of risk involved. You can lose everything. I wouldn't say, buy after like a few days. Like you have to buy the within hours of the announcement. And then the market goes up and then you have to secure the profits, right? It's a trade. It's not, you're not marrying it. It's a trade. But a lot of people are not going to do that. They're just not going to do it, right? Bit Digital. This is the Bitcoin mining company that just completely abandoned their entire Bitcoin mining thesis and strategy, and they're going full in on Ethereum. And a few days before the announcement, we dropped down to about $1.90. We're basically almost double that right now when I'm recording this, and it's probably going to go much higher because they already converted their Bitcoin into Ethereum. But look at the Bitcoin maximalists. Look how salty they are. This user said, these are the top institutional shareholders in Bit Digital, according to the 2025 SEC filings. Let's see how many of them will drop them in Q3. Basically saying BlackRock, Invesco, Citadel, State Street, Bank of America, these major financial firms, they're just going to drop Bit Digital because they went into an Ethereum treasury strategy instead of sticking with Bitcoin. This is what the Bitcoin maximalists think. Like they think that it's like Bitcoin only and guys, Wall Street wants to make money. That's it. That's their job. That's their fiduciary responsibility to make money. And so BlackRock, you think that they are not interested in Ethereum? Of course they are. They've even said it. Their chief investment officer said on an interview just recently that they're looking at Bitcoin and Ethereum as a far second, right? It's a far distant second. But that doesn't mean they're not looking at it. That doesn't mean they're not going to invest in it. Of course they are. And so to think that Bit Digital just did this and didn't take into account any of their large institutional investors, like that's even going to matter. Guys, Wall Street wants to make money, including these large financial firms, and they have a much longer time horizon than many of us. And so, yes, it is important to understand what's going on in the Ethereum strategic reserve space, because these companies, this is the ground level. Think about what happened to MicroStrategy. And by the way, we're talking about these prices moving, right? Bit Digital doubling, BitMine going up from $4 to $115. This company GameSquare, they're buying right now, and Ethereum is still basically close to cycle lows. I mean, if we pull this back from the bull market, the cycle low was about $1,000 when everything crashed in 2022, $1,000. But if we take like the post FTX timeframe, right, the low was basically about $1,500. So not even half of where we're at today. So if these companies like GameSquare are already pumping just based on an announcement that they're buying the Ethereum, and then Ethereum doubles or triples, what do you think is going to happen to these stocks? While Bitcoin potentially is going to go down, right? Because we know there is a transition occurring, right? A rotation out of Bitcoin into Ethereum, out of Ethereum into alts. And this will continue. And it doesn't mean there's not going to be volatility. It doesn't mean Bitcoin's not going higher. Everything can go higher, much, much higher. But I do think at some point we're going to see that rotation into these alts. And I think that's underway right now. And so these companies, these are potential proxy plays to holding the underlying asset. And these potentially have much higher gains that could be made. I mean, MicroStrategy performed better in the bear market than Bitcoin did, right? And so do you want to hold Bitcoin or MicroStrategy? Well, in that scenario, I want to hold MicroStrategy. In the scenario we're in now, where they're just keep taking out more and more debt and more and more debt and more and more debt, no, I don't want to hold Bitcoin. I'd rather hold Ethereum, which hasn't performed. I'd rather hold the Ethereum layer 2s that are being integrated with stable coins, that are going to be integrated with the financial institutions, that are going to be integrated with the banks. Guys, this should be very clear at this point. And by the way, the banks are already doing it. So we've talked about JP Morgan. We've talked about some of the other banks that are testing. Well, now we have the NRW Bank issuing their first fully digital Eurobond on Polygon. So I saw rumblings of this throughout social media. This transaction involved major financial institutions like Deutsche Bank, DZ Bank, and DK Bank as joint lead managers. So NRW Bank completed the first fully digital bond as crypto security under the German VIS with volume of 100 million euro, supported by Cashlink as crypto security registrar and issued on the Polygon blockchain. And this is directly from their website. It shows the issue size is 100 million euro, 2 years. The coupon is fixed annually, and then it shows a little bit more about the blockchain-based bond and the digitization of it. So this is the new way that they're going to be settling these bonds on the blockchain. I think you guys can see this fairly clearly. But one is the prospectus, then the execution and documentation. Then this is done on chain, aka Polygon, digital issuance via the register, settlement and custody, all done on chain. Then you have secondary market trading, coupon payments, and redemption. Increased efficiency through digitization. So you can see the connection between TradFi and DeFi, right? You start with the NRW Bank. Payment of proceeds come from DZ Bank, DK Bank, or Deutsche Bank. And then they are ordered for minting of the tokens, right? NRW Bank orders the minting from Cashlink. Cashlink then transfers the token to the actual bank. So that is kind of how that works there. So what's the main difference between these bonds and existing bank bonds? Tokenization on a blockchain. That's basically the difference. There is no global note held through a CSD. Is the blockchain-based digital bond tradable in the secondary market? Data is published via Bloomberg and WM. This enables processing and tradability in familiar systems. Current only OTC trading is available. That's basically it's not on the NASDAQ or the Dow Jones. Yeah. It's basically on the OTC markets. And can investors buy the new bond in the secondary market? Yes, this is possible. However, the bond market may not be as liquid as a traditional bond. So those are some of the questions for these blockchain-based bonds. But yeah, it's already underway and it's already deployed on the Polygon blockchain. The premier layer 2 on Ethereum. And look at how far down Polygon is. Number 40 on the market charts, $2 billion, right? And so we have banks getting involved in crypto and utilizing Polygon at $2 billion valuation. And meanwhile, like I said, there's cryptos in the top 10 that can't even get a stable coin. Then you have Hyperliquid, which is just a DEX, SWI, which is a dump coin for the billionaires. I mean, come on, guys. Like, if you don't think this is all going to go back to fundamentals, I don't know what to tell you. I definitely think it's going to. And I think that the institutions are letting you know that. And it's not just these coins that we just talked about. It's also Hedera. Now, before we get to Hedera, because I know a lot of people are going to be asking, Cryptoviser, what is going on with Internet Computer? I don't know. I went on to their dashboard this morning, and yeah, I see that there's quite a few metrics that are at zero, including total transactions and transactions per second fell off a cliff and went to zero. Now, we do know that there is a lot of network updates and changes occurring on the Internet Computer, and I would imagine, especially because we haven't heard an announcement of this, that this probably has to do with that, right? Reconfiguring of the network, and then they have to reconfigure, I would imagine, some of the APIs and backend, calculators that figure out these metrics. And I'm guessing, I could be wrong, but I'm guessing that's the reason, not that the actual blockchain went down, because it's multiple metrics. You can see transactions are at zero. The burn rate is basically at zero. Millions of instructions per second is basically at zero. And this has been going on for a few days. So I'm going to put it to the fact that the network is being reconfigured. And it's really being reconfigured for Caffeine AI, right? I've seen WebAssembly updates. I've seen subnet updates and a lot of proposals that are being put through to kind of update the network. And I would imagine a lot of these metric calculators are going to have to be updated as well. Now, I could be wrong on that, but I'm not like super concerned as of now. We have a big update coming up with the Caffeine AI rollout. I believe maybe by the time you guys watch this video, it's going to be already completed. But, I think if you're not in these coins that we're talking about now, I don't know that you ever are going to be. I mean, we are literally at the 12 to 18 months. We're actually at 14 to 18 months after the Bitcoin halving. Maybe 15 months to 18 months, which means we have 3 months left in this cycle. And so we can go up to 2, 3, 4, 500, maybe even $1 million in Bitcoin. But then we're going to come down. And people are not in any of these other coins. People are in 100% in MicroStrategy, 100% in Bitcoin. And meanwhile, we're seeing all this other network activity. We're seeing all these rollouts. I mean, literally, Internet Computer is rolling out AI capabilities to code, deploy, and host on the Internet Computer for you. This is unheard of, first of its kind, global leader in AI implementation of blockchain capabilities and what Dominic and the Dfinity call the self-writing internet. And meanwhile, there's still people who are like, I'm not sure if I'm going to invest in it in this cycle just yet. I may invest in a few weeks. It's like in a few weeks, everything may be going down, right? Like that's literally where we are in the cycle. And so when I'm making these videos, like it's becoming harder and harder because it's like, we're not really talking about what to buy. We're talking about like what to sell. Meanwhile, I want you guys to pay attention because again, DeFi, altcoins, they haven't really seen all-time record highs. And some will, I think. In one of those may be Hedera. We're seeing a vast push of Hedera education, Hedera implementation, interoperability. In the first half of 2025, Hedera's USDC listed on both Binance and Crypto.com, two of the largest exchanges of the world. The issued USDC grew 1,200%, volume increased 420%, and transfer fees remained fixed at 1/100th of a dollar, right? 1/10 of a penny. And so this is all being done on Hedera. And there, again, it goes back to USDC, right? The USDC is going to bring the inflows. Polygon, USDC, Polygon, tokenizing bonds, right? Hedera, USDC, AI, stablecoin studios, right? They have their own stablecoin studios. So if you want to create a stablecoin on chain and bring it liquidity through Circle, you can do this all on Hedera. The numbers are in, and USDC activity is seeing a major uptick on Hedera. Transaction volume is increasing year to date, with an average monthly transactions up by over 400% since the end of last year, and it's all possible thanks to Hedera's core design. The steady rise in USDC volume on Hedera signals a shift in stablecoin transfer at scale. Hedera's architecture is purpose-built to handle this rising demand, and it's opening up new possibilities for what builders, businesses, and institutions can do with stablecoins. Duh, right? We know this. And so seeing all of the growth in USDC on Hedera, what does that tell you? Got to figure that out. People want me to give them all the answers. You guys can figure that out, right? And Hedera is also now in Grayscale's fund. And this is, again, I think, a reshuffling of where Wall Street views a lot of these altcoins. And, you know, this could be setting us up for a reshuffling of the top 20, top 30, top 40 cryptos in this cycle. And so will we hit $1 million Bitcoin? Will we hit a $50,000 Ethereum? I think this cycle, it's more likely that we're going to hit a $50,000 Ethereum than Bitcoin going up to $1 million, just because of all the inflows we've already seen in Bitcoin and the steady flow of selling. But I could be wrong, and I want to know what you guys think about all these coins that we discussed today, from Internet Computer to Ethereum to Hedera to Ripple to Polygon to XRP. Let me know down below in the comments. I'll see you guys on the next video. Don't forget to give this video a free thumbs up, and I'll see you when I see you. Crypto on.